Yeah, good morning, everyone. We saw yesterday the correction continuing in the US market, though marginal, and futures are also soft. In Asia market also, we are seeing some corrections across the board. Uh, and but On the other hand, if we see the commodity, they are not showing that scenario. Uh, Oil is near about 73, which was hovering around below 72 yesterday. Then aluminum is also up by around 2%, whereas copper is down by around 0.5 and iron ore is down by around 1.5%, and steel is up by around 1.5%. So commodity is not reflecting the what is being seen in the equity market. Today, ECB meeting is there, which may give some indication on tapering, though interest rate are likely to remain same. But there could be some indications from ECB also on how they are planning to reduce tapering, and that can have some impact on the market. So one need to be watchful on that. Then Fed will be coming up with Fed meeting is on 22nd September. So people will be watching that very carefully, how much they are reducing the bond buying, or they are just deferring it for some other meeting. So one need to be watchful on that. So now I'll request technical team to take up first.
Yes, thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open on a flattish note. From the last two to three trading session, we are witnessing that the Nifty is facing a strong resistance at around 14,400 to 17,400 to 17,450 marks level. From last 3 days, we are witnessing that it is fails to maintain a positive closing above the same, which gives some cautious indications. So we are witnessing a profit bookings at the higher levels. I believe that as long as Nifty trades below 17,400 or say 70,400, 450 range, we are like to witness some profit booking, which might take a Nifty towards 14,000 to 17,200 to 17,000 levels. So 17,000 will act as a crucial support zone. From there onwards, we can see some pullback rally. Now these are the important support of the Nifty, whereas on the higher side, as I said, 17,450 is the crucial resistance zone. If it's break that level and maintains a positive closing at least for one or two trading session, then we are likely to witness some positive rally towards 17,600 to 17,700 levels on the higher sides. Bank Nifty is the one yesterday which has shown a good pullback rally from its low towards 36,500 levels, 36,800 levels. Now it will be the Bank Nifty who will might take a Nifty on the higher sides. Now the Bank Nifty has a crucial resistance at around 37,000 level. If it's break that level, then definitely we are going to witness positive momentum towards 37,200 to 37,400 levels. Whereas on downside, the yesterday's low that which comes to at around 36,500 will act as a crucial support zone. If it's break that level, then 36,300, 36,200 levels can be seen. So these are the important support and resistance levels on the Nifty and the Bank Nifty. Index is a little bit volatile, but there are definitely, it's a stock specific market. We are getting a sectorial rotation into the stock market. So one can go for a quality stocks with the strict stop losses. On the Nifty Finance side, for the today intraday purpose, the resistance is placed at 18,450. Above that level, we expect a move towards 18,600, 18,650 levels. On the low side, 18,220 will be the immediate support zone. Below that level, 18,170, 18,100 levels can be seen. So the overall view is little bit cautious, but definitely, as I said, it's a stock specific market. Among the stock, HDFC AMC looks really good on the chart setup. Yesterday, it has given a gain of almost 5%. I believe that this rally is likely to be extended towards 3,300 to 3,370 levels on the higher side. So those who are having any long positions, they can definitely hold on with a stop loss of 3220 levels on the downside. I think that's it from my end. I request derivative guys to take a call forward.
Yeah, thank you, Swati. Good morning, everyone. So as per yesterday's derivative data, we have seen mixed trades from the OI positions As on the higher end, we are considering that from last 2 days, Nifty is witnessing strong resistance at 17,400 levels. It is getting difficult for Nifty to hold and sustain around 17,400 level. And on the downside, we are seeing that the Nifty has strong support at 17,250 levels on the intraday basis. So once the Nifty gives a fall below or breakdown below 17,250 mark, then we might expect 100 to 150 points on the downside till the 17,000 levels, which will act as the important support zone as per the OI positions. So currently the scenario of the market looks positive. It's a stock specific market and we are witnessing strong buying from the stock specific. So once the Nifty manages to give or gets a stable about 17,400 level, then again buying momentum will be seen from the index front, which might take a Nifty towards the 17,550 to 17,600 levels. As per stock specific and sectoral specific, we are witnessing Bank Nifty has given a major breakout on the higher end, and we might see Bank Nifty towards 37,500 to 38,000 levels in coming days. So keep watch on the Bank Nifty stocks. As per stock specific, we expect SBI Bank, Kotak, and Naukri. These three counter looks positive in today's trading session. That's it for the day. Thank you.
Good morning. RBI has removed UCO Bank from the prompt corrective action restrictions. So this should be positive for UCO Bank. Also, SBI Life Insurance, there is news that Canada Pension Board will be selling about 2% stake in via the stock exchange through the book building offering. And the price for this transaction will be in the range of 1160 to 1220 per share, which is about 0% to 5% discount to yesterday's closing. So if at all there is a steep decline in the stock price, then one can look at buying the stock from a trading perspective because the business momentum remains strong. We discussed a couple of days back also the insurance numbers were strongest for SBI Life. That's it from my side. Thank you.
Yesterday, we attended the meeting with IPL, that is the India Pesticides Limited. This is one of the recent IPOs. They make technicals and formulations for agrochemicals, and they supply to many countries, and they have exports of around 70%. And technicals contributes around 85% of revenues. So the company, the business-wise, it is doing very well. In technicals, they have a very strong foothold because of their R&D efforts, and because of that they have developed few molecules. Since last 3 years they have since the last 3 years whatever they have developed is now contributing 42% of that, 42% of revenues, and that is where the margins are also growing. They have their own process engineering team. That is why even their asset turnovers are higher, because they keep on improving the processes. Currently also in Q1 they have launched 2 molecules, that is a soft launch, and there are 6 more in the pipeline which would be done in this year and next year. And because of the growing businesses and higher capacity utilization, they are also going for capex and increasing their capacities. So overall we are very positive on the company. The ROEs are very strong, the margins have also they have one of the highest margins in the sector, which has also improved further in Q1, and which are likely to improve because that is a structural changes and structural improvement in margins. However, in terms of the valuation, the stock is trading close to the higher level of the peer group, except PI Industries, which is in different league altogether. Apart from that, if you compare it with any other player like Rallis, Dhanuka, UPL, they are trading higher than that. So we believe that though the company is doing very well and the profit margins are on the operations on the right track, we advise that any dip should be used to buy the stock instead of going on the higher levels. So that's it. Thank you.
Yeah, good morning, everyone. TCS has been selected by Avianca, a leading airline in South America, as its strategic partner in its cloud transformation journey. This is positive to TCS. Thank you.
Yeah, apart from that, Jindal Steel and Power has said that they are reducing loan in their international subsidiary, which is around $110 million, and which will be reduced by 50%. And they had kept a target of FY23 zero debt company. So that they reiterated that that will be approach. So overall debt reduction is on the positive side, but considering the overall scenario of metal sector or specifically steel sectors, things are more of prices are stable and costs are increasing. At such EBITDA per ton which has come very exciting in last quarter, we'll see some declining trend in the coming quarters. So we are neutral on the sector and GSPL as well. Apart from that, yesterday CCL management has given indications that the demand is quite strong for their product, that is coffee, instant coffee. They had earlier guided for 10 to 15% growth in the current year, but they are expecting higher than 15% growth in the current year, and reiterated their 3-year doubling of the revenue plan and profit in next 3 years. Whereas recently, apart from India, they had operations in Vietnam. Vietnam has faced a lot of increase in the COVID cases in last 2 months. So that may disrupt the business in the short term in the current quarter. So for the time being, the stock may remain range bound or may even correct a bit on that account, but that is more of a temporary phenomena. From next quarter, both India and Vietnam both can do well. In fact, they had planned a big expansion in Vietnam, which will start towards the end of the year, and that can boost the revenue for the next year substantially. So what we see that if suppose we see any corrections in the CCL product on account of Q2 results, then that can be used as an opportunity to enter the stock. We had recommended this stock long back at around 250 levels. From there, the stock has shown good run up, but here also one should continue to hold on or buy on dip in this stock. That's all from us. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.